Hello everyone, this is Harada from Minatrade Juku. Today is Sunday, December 21st, 2025. In this video, I would like to discuss how the Nikkei 225 futures market is likely to develop from here. At the moment, prices are hovering in the 50,000 yen range. As you can see, after marking a high of 52,700 yen on November 4th, the market has been forming lower highs. In short, nearly 2 months have passed, and during this period the Nikkei has been trading within a range of roughly 3,000 yen, between around 51,000 yen and the upper 48,000 yen level. In other words, the market is currently in a range-bound phase. Since October, volatility has been extremely high, and the market has continued to move in this environment. So, what happens next? The reason I decided to record this video is that around mid-October, around October 20th, I released a video saying that the market would rise until President Trump's visit to Japan and that afterward, the market's tone would change. Since then, that scenario has largely played out. Although prices have declined, we have not seen a breakdown below 48,000 yen. That is the reality so far. However, I am recording this video now because starting tomorrow, December 22nd, we are entering a 1-week time window in which a significant move could occur. As for direction, my conclusion is clear. I believe the market is about to move downward. Some of you may remember that last year, from July to August, the Nikkei surged and then crashed sharply. On August 5, 2024, the market recorded one of the largest single-day declines in history, around 4,500 yen in just one day. At that time as well, we warned that a crash was coming, and it did. This time, although the market has declined, it has not yet reached a level that could truly be called a crash. In the video I recorded on October 20th, I clearly stated that prices would rise from around 49,000 yen to the 51,900 yen zone, and in fact, they did. Since then, prices have stalled around that area, which I believe reflects positioning by large institutional players. From here, my view remains unchanged. There is still a possibility of a sharp decline. In December, factors such as an FOMC rate cut and a potential Bank of Japan rate hike created conditions that could have triggered a sharp sell-off. However, from a fundamental perspective, these events appear to have been largely priced in, and the market has remained relatively stable. Even last Friday, prices rose during the night session. That said, I see strong resistance in the area around 50,400 to 51,400 yen. Recently, prices peaked around 50,000 or 60 yen, which I believe is an appropriate level. Ideally, from this area, prices would begin to decline. If the market rises further, I believe the upper limit would still be around 51,200 to 51,900 yen. Even if prices reach that level, I do not expect them to go much higher. In any case, I do not believe this is the time for the market to update its all-time high. There are numerical levels shown here that I won't explain in detail today, but they are highly significant. Based on them, I believe prices could fall to the 46,608 yen range. If prices were to reach the major reference point shown here at 34,040 yen, the market could potentially decline as much as 16,000 yen from current levels. That would be extremely serious. From the all-time high, such a move would represent a drop of roughly 35%. So what will happen? In any case, although the market has repeatedly rebounded from the 48,000 yen range, I believe that level will eventually break. The area around 47,000 to 46,000 yen is a realistic target, and if that level breaks, the situation could become quite severe. Because of this, my strategy is trend following on the short side, in other words, selling. As we enter the week starting December 22nd, many people may be expecting a year-end rally. And it's true that prices are historically high. However, even over the past year, the market is trading at elevated levels. After dropping sharply in April and then rising about 12,000 yen to reach around 52,000 yen, the market may now be vulnerable. While it may look as though prices could continue rising, I believe there is a strong possibility of a sharp decline toward the year-end. Therefore, I sense that large institutional players are about to make their move, which is why I wanted to record this video in advance. If the market moves as expected next week, that would be an ideal outcome. If it moves against us, I will of course cut losses immediately. Even if prices rise, I do not believe the market will set new all-time highs. In that case, I would look for another opportunity to sell. In the near term, if prices rise, I will stop out, but overall, I believe the probability favors resistance in the 50,000 yen range, followed by a sharp decline. That is why I am currently implementing a swing trading strategy. I hope this video has been helpful to you in some way. Thank you very much for watching, and I look forward to speaking with you again next week.